All right, folks, welcome to the weekly market recap, going over every trade that we took throughout the week, as well as going over the lessons, the improvements that we can take from this week onto the next week and on forward to improve our trading. This week was very nice. We ended up on we're still currently in this 5-hour trade. It's currently up on a 3RR. I do not know if he can hit take profit or not, but it looks like definitely gonna will, because we were just going to the higher time on liquidity. But over here, as you can see, we ended up on a week with a 4.5, a -1, -1, so 2.5 with a 5RR here. So we lost 2RR here, 4.5RR here, so we ended up with 2.5RR here with a 5RR that's currently gone. That's high likely to take profit. You're going to be ending up on a week with a 7.5RR if it hits take profit, if the market opens it up to, goes up without going down. But yeah, that is what we ended up in a week, 7.5. You could say, but one day, well, this take profit hasn't hit take stop loss or not. I don't know. So I'm gonna say 7.5 here because this is at least highly to go hit take profit. So I'm gonna say 7.5 or a week. With these two losses, this loss was a mistake. This loss was meant to be this week is meant to be a 14.5 hour week, but we only input the 7.5 hour a week. It's supposed to be a 14.5. But wondering how, we had a dawn model right on the on these lows, but wondering what market still went lower. But as you guys know, we go for a fixed RR. So that's set up right over there, offered this fixed RR for a 5RR, as well as right over here, we go for another 5RR and 4.5RR right over here, and -1. So this one I made a mistake. I'm supposed to enter the dawn model, not the model one itself. And yeah, this one as well, right over here. We entered a model one, we put the right stop loss there. There was a dawn model there, but that type of dawn model, we do not take a trade like that because it's too risky without having a safe stop loss. Our safe stop loss usually going to be the high or low of the fairly swing. So usually fairly swing or the model one itself, the total swing itself. Which, yeah, that's the week. Now let's go over every individual week, and we're gonna all up and mash it up and talk about it because this is a very important week. There's a very viable lesson on Friday. Friday is a very viable lesson, and on on Thursday is a very viable lesson. So now let's get straight into the weekly market recap. So Monday, we were overall bearish here. How come we were bearish? We were selling above the opening price. You can see there was no wick here. Does it matter there's no wick? No, it doesn't really fucking matter because all I had as a confluence on Monday was, okay, we're selling above the daily opening price. We were in the premium of the daily range. We had a daily premium ERO to discount IRO with a wick above lower prices. We as well had a daily premium IRO to ERO, or you could say premium ERO back to discounted IRO, as well as we had a SMT with the range highs and range this high with SMT. And on the weekly, we had a weekly seated downside, a weekly IRO there, which is gonna fail because we are already going from weekly IRO to ERO. We can't go from weekly IRO to IRO. It doesn't make sense. Now on the lower time frame, on the 4-hour time for the market context narrative for this Monday trade for a short, which was a SMT with the high. We had a daily range, but a high, split low, stable high, stable low, premium discount. When the premium of the daily range, we're gonna go sell it down. We had a 4-hour near growth profile 1, one accumulation, 5-day mid position 9 expansion. We had a 4-hour CRT here, as well. We had a bearish order flow. The only time bullish order flow is gonna happen is right after this closure. Once we get a closure above this, we have a bullish order flow. And as well as that was good enough. We had SMT with his highs right over here with the quality pair, which is GU during that time. And we had SMT with DXY with this high as well. And that's what we had here. And our ranges was this weekly CRT high to weekly CRT low. How goes the weekly CRT high? How come this is our range high? Weekly CRT high comes the range low, weekly CRT low. Did it work out? No, but that was our context and narrative to short it down. Now, if we go to lower time frame, now we got our range here. So I'm looking for a period between 6 a.m. and 10:30 a.m. I'm looking for a setup to form between 6 a.m. and 10:30 a.m. If you formed any time after that time zone, I am not looking for a setup. As well, I looking for a valid high, valid low. In this case, at the 1 a.m. CFT high, I did not have a valid high, so I'm looking for that to get purged. I'm looking for a valid high to get formed, which got formed right over here. Then I'm looking for it to happen at the right time. So this high right here did not get purged at the right time, but we did have a purge at the right time right over here, but there was no more confirmation, so anything could happen here. We go purge it out one more time, they go lower, or it could give us a model one. In this case, purge that one more time, give us a Dawn model. This Dawn model is a very low probability Dawn model. How come? Well, it is not a low probability. You can see overall went to the downside. The reason I say that low probability, it's not something low probability. It's just that it's not a safe stop loss. You gotta put a 10% stop loss, but 10% stop loss, you're not very determined. Sometimes it could be 7 pip stop loss. It could be whatever. So this one right here did not have a safe stop loss. So I overall did not take this trade. But I was looking to take a model one and putting a stop loss right on the, right on the 50% of the threshold, right above it. So if the market does tell the 50% threshold, it could reflect out of it quick. So we just put right above just for the secure. Right, you can see right over here, we had a impulse to the downside. So I was like, okay, market is high likely not to go to the rejection block where we're looking to take a trade, which is a total soup model, which is a Dawn model. So okay, market is high likely to go back to the Dawn model right over here. So we're looking to take a model one ourselves and put ourselves right above the threshold. And this trade, realistically, if I'm taking to my new strategy, which is a Dawn model, which is the only I'm going to over focus on, because if I focus on because I right now have 4 entries. I have a threshold model one itself, a different type, and I have a resistance block. I have types of model ones. There's so many types that if I put my focus on all 4, none of them will ever go to true mastery. So if I focus on total soup itself, which is when I first ever started trading, I had 4 trades ever. That's when I first started trading. I've had multiple total soup trades, but throughout my career, which beautiful total soup trades, but I never had the actual definition of it. I just, okay, this high is beautiful, tapped it, goes lower. It taps it, does an M shape, which is, makes this a fairly swing, then goes lower. Right? So I was like, okay. I've had that happen to me before, but I never found the actual way to trade it. Now I do. And if I put my full focus on 4, none of them will ever go to true mastery. I've already mastered the model one itself. I've already mastered the threshold itself. I've already mastered the rejection block itself. I have not mastered threshold. The total soup. I'm wondering, well, what if you get the fucking threshold to be there? I mean, you get what if you get the Dawn model to be there and the model one and and a threshold or rejection block entry there as well? You can enter all 4 of them. No, one is the best, right? Some people could double down on those positions. We can get a Dawn model, eventually get a model one itself, get a threshold entry, and super down lower. Keep on going lower. Will I do that? People could double down on that. I don't do that because basically that's not consistent. What could happen is a Dawn model could hit a take profit, other ones could fail. When they fail, guess what? You made 5 RR, and all this other concept, you just lost all of that. You just made 2 RR. You want a 2 RR? Me personally, the reason I stick to Dawn model right now, the reason why I didn't, the reason I'm not trading the model one itself or the threshold is because one reason, and the reason is I have a low win rate. I have a 40% win rate, so I need to go for a 3 RR and above. Okay, so my model one itself, it does offer me a 3 RR, but I need a little higher than that because I took a lot of losses. Literally, I take so many losses. This win right over here, and the Friday win, hit all the losses back. It made the losses back from last week. Last week, we had Monday trade loss, Tuesday trade, it was a break even. Wednesday trade loss, Thursday trade no trade, Friday trade another loss. We had 3 RR that week, negative 3 RR that week. This week, right over here, that week's supposed to be a 11 RR week, or possibly even more. This one right over here, 4.5 RR, made all the losses back of last week. Where you lose a little bit more. Guess what? This one made it all back. plus gains. So I take a lot of losses. You can see last week 3 losses. I had opportunity to enter a profit, but guess what? I ended a loss. So I took way more losses. So I need to go for a higher R. But when it will, 3R is good. You know, you lose like what? You have 40% win rate. 3R is profitable. The thing is, I don't like my entries to. What's the best way to say this? I don't like my stop loss to be so wide. I like to be tight. Rather than well that, because I want to get in and get it quick out, right? If you're entering a Turtle Soup model or the Dawn model, you get in, you get out quick because you have a tighter stop loss, so your RR is way higher. So you get in, get out, boom. Oh, it's probably saying it's a little riskier, but guess what? You already have material through backtesting. Nah, I don't backtest, bro. I just through me looking at the live market data, I constantly see this pattern happen. So since I constantly see this pattern happen, I'm gonna use that pattern as an advantage. My Dawn model includes the valid high, valid low, which is ICT's 3-drive pattern. It's not like that. It's different. It's much different. It's much more improved because for the ICT 3-drive model, ICT 3-drive pattern, it goes like this. You make a low. It doesn't make sense, right? Because what? Make a 1 low here, make it a 2nd low, 3rd low. Right here. First high. Let's go to 445. First high, 2nd high, 3rd high, 4th high. So this right here is supposed to be wrong. And how do I go around this? Since I have my valid high, valid low rule, I go from okay, analogy high, okay, phonology high here after pushing this high. Okay, I'm looking at how to get purged. Okay, I'm looking at how to get purged at the right time. The right time gets purged right over here. Okay, I'm either looking for that had to get purged for a model 1 itself, or I'm looking for a Philly swing. Not model 1 itself, I mean, I'm looking for the Dawn model itself, or looking for, you know, a push lower. Guess what? Give the Dawn model and the model 1 itself and went down lower. So you can see, if you were to just trade the, you know, actually the 3-drive pattern, you're gonna fucking get wrecked. You got wrecked over here. You got wrecked. If I was saying, you know, well, that's not too high here. That is a high. If you go to the 4-hour time frame, that's 4-hour time frame high. And ICT goes based on the 4-hour time frame for the ranges. What ranges does he use? The 8 session range or the 11 session range, right? He uses Pacific range, which is London, 1 a.m. to 5 a.m. It's a 5 a.m. high, 1 a.m. high. So you're gonna get wrecked if you do that, right? Because my pattern is my valid high, valid low is not like ICT pattern, is way different. So I have my ways trading this. I have either enter a trade on a, you know, a Turtle Soup, which is the rejection block Turtle Soup confirmed beforehand with a model 1, or the Philly swing with an SMT and my pair, cannot purge out the liquidity because I need to have a safe stop loss. The Turtle Soup rejection block gives me what? A safe stop loss. A Philly swing gives me a safe stop loss. I have a predetermined stop loss, and my take profit is already predetermined as well, fixed 5RR. And probably wonder, well, why 5RR? If you have a tighter stop loss, you have way more to go for RR. So if I'm gonna go for maybe 4RR, I need to go for at least a 5RR because a model 1 itself usually offers a 3RR. A threshold offers a 4RR. A Dawn model offers a 5RR. Why a threshold offers a 4RR? Because you stop it tighter. Model 1 is this big, threshold is this big. You know, Turtle Soup is this big, stop loss, so you have way more RR to go for, right? But warning is way more riskier. That's to you, man. You don't know how to trade, buddy. So that's that. And yeah. So on Monday, there's a lot of renting. Just to show you guys, I'm not looking for a extended validation. It's just to let you guys know the logical reasoning. And over here you can see we had a right time to purge already. You know, it was not necessary for the market to go back up higher from here. It was necessary because, you know, Dawn model that was performed there. Eventually we had the right model 1. We did a big exposure to the downside. So we're no longer looking for the, you know, Turtle Soup entry, we're looking for the model 1 itself. But we're putting a stop loss right on the above the Turtle Soup rejection block threshold, because, you know, we put over here, we lose too much RR here, right? So we don't put that high. So yeah, because market today explodes to the downside, it wouldn't make sense for the market to go all the way back up and go lower because they lose too much money. The market makers, right? Market has already generated enough liquidity to go lower. So just going back up higher, getting a little bit more liquidity is good enough for them to go push lower. And that's what happened. And I got a trade at 8:30 p.m. So right on this low, I got a trade for a 4.5 RR. And but wondering, well, at first my take profit was down here. I had no other take profit. But why did I do that? It's because I found out that what market does, what markets tend to do is just say there's two traders. Me, let's just say this is me and somebody else. Somebody else gets a trade. He wants to hold it all over here, no break even, no partial. He could partial, let's say partial here, partial here. But it all goes over here, right? Guess what? He goes for like an 11 RR. He makes a trade. We both get in the same trade. Market goes up here. I make 5 RR, right? Because I've been taking Total Soup Model 1 itself. Total Soup resistance block entry, 5 RR. He's holding it, still up 5 RR. He's taking profit one. He partials now. He's break even. But now guess what? He made what? Probably from that trade 2.5 RR, not 2.5, like 2.1 RR, because you still have 3% now running. Now he's up. Now he locked in 2.1%, 2.1% RR. But he has 3 RR running. I made 5 RR. I just made more than him, right? And eventually I get another setup to go up higher and make another 5 RR. Well, he makes, still up. Now he's made 5 RR. So now I'm making 10 RR. He's making 7 RR, or potentially, yeah, somewhere around there. Making even less. Because now he has a partial here. Now he's making from 10. We're supposed to make. He made fucking, let's just say, for like 8 RR, 7 RR, let's say 6 RR he made from it, because you lose a lot of position from this partial, because now your position is way lower. So now you made 6 RR, I made 10 RR, so I'm up 4 RR against him. Now the market fully reversed. Now he made what? I made 10 RR. He had a running position, which was what? Let's just say a running position with a positive 2 RR. So he made, from this push up, I made 10 RR. He made 5.5 RR or 6 RR to the max. 6 RR is a lot for this guy to make. He probably made what? 4 RR, 4.5 RR. I made 10 RR. So I just made more than him. And guess what? The market reversed. I went for no partial, no break even, for a 5 fixed RR, because my trades are very tight and my take profit is gonna be very tight as well. It's gonna be very quick and straight take profit. Even if it does go in a win, let's just say this one goes reversed, it stops in order to break even. But guess what? I made more money than him. He made 4.5 RR. I made 10 RR. And eventually, the same market does go up high. I might have another opportunity to go for another 5 RR. He ends up in a trade with a 6.5 and a trade with a 15 RR, right? So, like that, because what market does is it could reverse anytime he wants. Although, okay, we have a predetermined draw look, he wants to go lower or whatever, but guess what? Market is gonna, sometime, the market knows what to go for, right? Market is not random. We thought it's gonna go lower, go down here, but will the market really go down here? No, because market is overall at higher time is bullish, so it doesn't make sense to go over down there. So I, as a smart person, take it straight, make 4.5 RR, boom. Other guy, he holds it. Just say he partials. Now he's made what, like 2 RR, 40%. He partial 40% here. He made 2.1 RR. I made 4.5 RR. I made more than him. Eventually, market goes up, stops him out. But I'm not in a trade no more. Get another trade to push it down here again. I make another 4.5 RR, or not 4.5. Let's just say 3 RR. Now I made 7.5 RR. He made 2.1. He lost the position, right? So you can see overall the market was bearish. But if you were to stick to the bearishness and hold the trade all the way, you're not gonna make anything. So fixed RR is way better. The fixed RR, you're not partially, you're not breaking even. You're just making a fixed amount of RR. And for me, it's a 5 RR, and I only enter one right now. I will ditch the Model 1 itself or a threshold, primarily the Dawn model, which is the Total Soup model, nothing else. So let's get straight into it. Now that's the lesson of Monday. The lesson of Monday is I only go for a fixed 5 RR. I only go for a fixed RR, and I no longer trade the Model 1 itself. This is the last time I trade Model 1 because of the many reasons. I have a low win rate, and my style is way too wide, and I don't want to stick in a trade for too long. Okay, stick in a trade for a day, cool, but other than that, that's the reason, the whole reason right over there. have a low win rate, starting to go for more RR, which is a 5 RR, fixed RR. And yeah, and the next lesson is I did this trade. When I got a trade, I didn't, there's no time for me to break. I didn't even break any trades, so it went for a 4.5 RR trade. I did not break even, so we made a good thing. We cannot break even. We did not break even, which is the Friday trade. We broke it too early, which we're gonna talk about. So that's a lesson of Monday, Tuesday, no setups. Market just number of the setup we're looking for. So now go to Wednesday. Now Wednesday we had a different bias here. So Wednesday we're bullish now. How come? Weekly to the upside, weekly IRL to ERL, weekly CRT to the upside, daily time frame with a daily close above equals higher prices. How come? It's daily, premium ERL, so we gotta close above equals higher prices, as well as we had a daily class action profit to the upside, Monday low of the week. We had a daily's that's all we had. That was enough, to be honest. I'm not gonna lie to you guys. To the upside now for lower time frame, we had a bullish order flow on Monday, on Wednesday. Because above this, we're looking for a bullish order flow. We as well had nothing else. We had a range low, got soup, going range high. How comes the range low, weekly 60 low? How comes the range high, weekly 60 high? That was enough. We're looking for a near continuation. Yeah, eventually we're looking for a 4-hour CRT or forward CRT. Eventually right over here, we can see there was an SMT, this candle. That's where we made a mistake. We're going to talk about. Eventually, okay, I thought we had a 4-hour fair value gap, 4-hour SMT CRT to the upside. Okay, I was like, okay, the drone of the 4-hour CRT already got met without realizing the dope purge could happen. So what we did was, okay, I was like, okay, the hourly drone already got, the 4-hour already got made. So I'm looking for an hourly drone to just long it up. Eventually we had an hourly S&P CRT, which failed because hard to find power. Eventually we longed it up with a total sub model. Right, we had SMT, total sub model got here. We could take resistance block. Resistance blocks are a total sub. How come? Higher time from there imbalances, lower time from there are lower time from total soups, right? So lower time total soup, we entered the trade. We went up for a little bit profit, but it's overall gonna fail because we made a mistake here. Now you went to a loss. So the lesson of this trade is not there was no execution mistake. The only problem was here is, let me show you guys. I'm reading out the rule for you guys. The lesson is, in a New York situation, if there's a forward CRT in that specific day in a New York situation, I either trade the forward CRT if it follows my rules or no trade. Even if the forward CRT target is met, I still do not look for 1-hour CRT because during that specific day, there was a New York situation and there was a 4-hour CRT present because higher time frame, higher power. I either look for a 4-hour CRT or I do not trade, period, on a New York situation. The only time I do not look for a 4-hour CRT and I'll look for an hourly CRT in a New York situation for that specific day is if there is no 4-hour SMT CRT or double purge, if there's no 4-hour CRT present. Then I could proceed to look for an hourly CRT. Because the market, and the last thing I said, because the market could do double purges. So in this case, market did a double purge. So market purge out the S&P to the low, purge out the high. We as well had, double purge here. Market went up here, purge out the high, purge out the low. Low had SMT, purge out the high. Market went up high, hit down strongly, then going lower. Right? So that's the lesson. The lesson is, in a New York situation, if there's a 4-hour CRT in that specific day, in New York situation, I either trade the 4-hour CRT if it follows my rule or no trade. Even if the 4-hour CRT is still met, even if the 4-hour CRT target is met, I still do not look for a 1-hour CRT. I either look for a 4-hour CRT or I do not trade, period, because the market could do double purges. And during the New York situation, if there's a 4-hour CRT, I will prioritize the 4-hour CRT and look for 15-minute entry, not the hourly CRT. Only when there is no 4-hour CRT, then I will consider a hourly CRT executed based on a 5-minute. Otherwise, I do not take the trade because higher time frame equals higher power. Now, that's the lesson of this Wednesday. So pretty good lesson. Market going on John Loki. The overall did go with our way, but the reason it failed was simply because of our rule got broken. And our rule, I was like, okay, this is a new scenario I faced where market did a double purge, and the other scenarios I never had a double purge just because I did have a double purge. Now as a rule, very about a valuable lesson. And now on the Thursday trade, which I took a model one itself without taking the Dawn model, and we got stopped out because Dawn model already had to take profit. Dawn model, how could the Dawn model put when it will? You say you enter a resistance block to the soup, so you got stopped out, and you never had an entry here, and you got to stop out when the entry happened. The Dawn model, there's two ways of Dawn model, either failure swing or a total soup. Failure swing is when one asset takes out the low while the other doesn't. We want our asset to not take out the low because of failure swing. Now we had a bullish SMT, failure swing. How comes the failure swing right over here? This is our low. Push it out. Eventually we're gonna push it out again. This low did not, this low right over here did not have a failure swing because low did not get pushed at the right time. We're gonna push at the right time, now I have a failure swing. Now SMT now goes higher, then goes lower. But with market overall, you were wrong here. But guess what? We're not going for a full target, we're going for a 5 RR, fixed RR. Right? And on this trade, when we took our setup here, we still have the same bias of yesterday. The only new thing we have from yesterday bias was we just had a false market share shift, which, as you guys know, the false market share shift gives the most explosive price movements to the drawn liquidity, where the market will do explosive price movements after the false market structure shift slash breaker. Breakers and false structure shift gives the most explosive price. And what I mean by that is patternized false market structure shift and patternized breakers. Breaker and false market shift to happen right over here. They went lower. Eventually, you can see it took this long to go lower. Well, it took this in one single day. It took to meet the 2 days. It took 2 days of market to go lower, and one day market went up higher here. So you can see explosive price movements after the false market shift and the breaker. So that's what we had. That's what we had a daily IRL to ERL, and now everything else the same. And on Thursday, okay, I was like, okay, I have the right time to purge. I'm looking for the model one because in this case, I didn't ditch the Dawn model because after this day is when I confirmed the Dawn model. Okay, after this day, I was like, okay, I'm only checking the Dawn model here. I'm not checking nothing else but Dawn model because the Dawn model already got met, while the model one itself it failed. Right, so this is why Dawn model is so important, because Dawn model can get you beforehand. Dawn model can get you in, get you out, because can get you in, get you out before the market fails. Because you're going for fixed 5 or a tight stop loss, so you take profits very close, as well as it's less wide and you have less. You can get in, get out quick. Because right when the Dawn model happened, you can see explosive price when we have to the upside. All this did fail, but guess what? You still profit out of it because you're going for a fixed RR here. Now, took our model one itself. We put our stop loss right below the body because market did explosive move to the upside. Explosive move to the upside, so it doesn't make sense for market to go up all the way down lower to stop it. To go to the threshold or the rejection block. So our stop loss here is safe. The execution was fine. Everything was fine, but our entry is supposed to be happening at Dawn model, which after this day I confirmed that I'm not going to trade nothing else but the Dawn model because I'm getting early, get out early before the market reverses, right? Because usually the market will try to favor you a lot and reverse against you. Now, go to the lower time frame. First Dawn model right over here. We had the if we go back right over here, where was it? Oh, that's the 4 time frame. Right here. Was it this one? You gotta go lower. Right over here, you can see. So about the low, that's one that did not. So we had the failure swing. Now all we're doing is go to the lower time frame for the actual execution is for this trade. This is what I said. This week is supposed to be a 14.5 hour a week, but unfortunately, we did not happen. But it's lesson. We're all gonna catch it next time. We're currently get right here. Now go to lower time frame. Right over here. So we had our SMT. So right when we have our, SMT, you could instantly enter the trade out of there, right? Well, SMT, but you don't know how deep will the SMT go to. So you need to look for a 1 minute interval to getting, disrespected or something, right? So 1 minute for Viga getting disrespected, that could be a way for it to enter. But the way I like to enter the trade is simply by looking for either a 1 minute, usually for the SMT, when the market makes SMT, when he goes as a high here, when the market wants to go up to the high, it will make explosive fight to the outside to because the market wants to go to this high, market will do explosive to the upside, leaving 1 minute for Viga to the upside here, right? But one pair takes out the liquidity, well, this one doesn't, so it makes an SMT, but it's a fair Viga up here, or auto block for Viga, whatever it is. All we're doing is looking for that fair Viga to get disrespected, fair Viga right over here. All I'm looking for is for red gap to get disrespect. You can see market did come lower if we're going up higher, but that definitely does happen. So right over here, so looking for this one for red gap to getting disrespected. And how would I enter this trade? I would have not, waited for this red gap to get disrespected and enter here, because that makes me less RR. I said start a stop loss. So what we're gonna do is we're gonna look just for a bullish candle to be formed and we enter the trades. But our entry market order is going to be right over here. Right? Our entry is going to be somewhere around this fair value gap. Are we looking for a bullish, are we looking for some sort of bullish sign? So looking for a bullish candle, which we get right over here. Or I think that I'm pretty sure over here there was no SMT. If you go back to this time bar replay, go back lower here, there was no SMT here. If we go lower right over here, this candle 648. 648 is when we had the SMT right over here. 648 right on this candle. Holy. Boom. 648 right over here. We had the SMT. So this two ways to enter the Dawn model for the Philly swing is simply by looking to do your lock calculation. You can put your entry here or here, whatever you like, but just enough where you can possibly, because usually if you enter primarily, if the market's down here, enter just right down here, you wouldn't know what to actually, because market moment time moves quick. So you need to put your stop loss a little higher, and you need to go a little higher right away to just do your lock calculation. Once the market gives you some sort of little bullish calculation, bullish movement, enter trade right over here, put your stop loss right over here and go up for a 5 RR. Oops. Which is right over here. You could have done that. You could have done this, which you can see overall delivered beautifully. Market did come back lower than another SMT, but overall performed. And this your stop loss for the Philly swing cannot be this tight. You need to go a little lower, like 3 ticks lower, just to get that spread in there. Shit, so you don't want to get stopped about a spread. You go for a 5 RR. Boom, and it hits a take profit, and you're done. Or you could have done to the 50 time frame, since when the market has a Philly swing, market will be on the rejection block. What you could have done is, okay, with this deep on the rejection block, I could put my entry right on the threshold rejection block and long this shit up and go for a 5 RR. Right? I could have done here. If you done here, you would have been cooked a little bit. Boom, you can see if you're going today, you're gonna get stopped out. So you need to be a little bit smart, right? If I could say so myself. But yeah, that's the entry of Friday. You could have entered on the Dawn model on Thursday. I mean, so that's on Thursday is enter Dawn model. And for the execution, because we have SMT and 50 time frame, what we gotta look for is either on the rejection block entry threshold, or depending where the market is at, or the rejection block itself. But if the market is very deep down, there's a big ass wick, and the market is having a Philly swing all down here, you can put stop loss right on the rejection block and go from there. But in this case, your entry would have been just on the rejection block right over here. And all you're looking for is a 1 minute interval or 1 minute key level getting disrespected. That's against your bias. If you're bullish, you're looking for a 1 minute for Viga to get disrespected, and right when the 1 for Viga to get disrespected, do the right calculation and enter the trade to the upside. and go for your RR. But your entry is supposed to overall be, get the calculation right over here for a 4-5 RR. Right over here, you out of the trade. So you can see right over here. Look where you got out of the trade here at. You got out of the trade right on the breakup structure. Usually for the model, Turtle Soup model or Dawn model, what Romeo says is you want to get out right on the breakup structure. You want to get out before they get in, right? Which that doesn't really make sense to me, but some sort of chances they make sense. But that doesn't fucking matter. What matters is you have a fixed 5 RR, and that's all that matters, right? Nothing else. Now, on the Friday trade, we're currently up 3 RR. It's definitely gonna hit a 5 RR trade, but it's not determined yet. But right when the market opens on the 5 RR, on the 5 RR trade we're currently in, we're up 3 RR. Right on the market open, I'm looking to try my stop loss to a positive 1 RR. Why? For this trade, my stop loss right over here. Why am I looking to do that? Because one thing, there could definitely be an OTE here, but it's an equity edge balance rule where this is 3 RR. If it goes lower to my stop loss, I'm losing 4.5 RR here. I'm losing way more than what they told me to not lose. So I can't lose more than, like, well, I think pretty sure it during for the equity balance rule, like 5%. In this case, I'm in a trade with a 1.5% risk, and I can't lose 5%. So I will definitely try my stop loss. I'll trim my stop loss to a 1 RR, fixed RR. Eventually, if the market goes lower, it stops me out, okay, cool, because, you know, I can't do anything about it because the equity edge balance rule, that's the problem here, right? But you can see this trade, we're up 3 RR. Do I believe you might go all the way back down to 1 RR? Probably not. Market just gonna take profit before going lower. That's what I think, and that's what will happen possibly. Nothing is impossible, and nothing is possible. Nothing is impossible in the market. Right? Because crude oil was negatives in 2020 during the COVID. And now let's go over talk about the Euro USD Friday trade, which was a 5 RR with Kalia PRR. We took a long on Friday. We had the same buy, but we just more stacked up here. We had goes above equals higher prices. We had a weekly to the upside. We had a daily IRL to ERL. We had a Friday continuation because I said it was retracement. We also had a daily CRT here, as well as we tapped this kind of range with the range high, and lower time frames. The lower time frame is the important time frame here, right? In the lower time frame, we had a 4-hour CRT. We're first looking for our CRT, but our CRT, there was no entries on that, but market eventually went down lower. You know, and this was a new situation, by the way. So okay, I was like, okay, I'm not looking for an CRT. I'm looking for a 4 CRT because the 4 CRT got met here. Now the higher tariff is in place. So looking for a 4 CRT. So we're ditching the CRT because 4 CRT because higher time, higher power. And as I said, the Wednesday rule, the Wednesday trade, very important, right? That's why we look for a 4 CRT. In this case, we had a double approach here, push out the high and push out the low. We had a 4-hour IRL to ERL. As well, we had a 4 CRT to the upside. As well, we had a 4-hour SMT CRT to the upside over here with a correlated pair with GU and DXY. As well as we had a new continuation, stacked bias. We had a false market shift the day before, which this day was very easy to trade because what did the market do? Market did a false breaker and false market shift to the downside, which that is the best for a false market shift to the downside and a false breaker. Those are one of the best total soup trades that you can take. You can see it in this trade over here. There was a total soup trade they could have taken to long get up to the drawn liquidity here, right? And as well, there's an OTE that happened the day before. So this trade to the upside was very easy to take to long it up. And this trade right over here was very nice as well because, as I said, the day before we had a full market shift to the upside. You can see we just had explosive price move to the upside here as well. Now that's a higher time frame. Now go to low time frame for execution. I was either looking for a failure swing or a Turtle Soup rejection block Dawn model. And in this case, we took that rejection block Turtle Soup Dawn model and put a stop loss right below the 50% of the rejection block and put it right below that low Why below it? Because market could potentially tap the 50% go up higher. And we had a, we had SMT here. So we first had the right time to purge, we had a legit low. So looking either for looking for a resistance block to the model, or we're looking for a failure swing. In this case, there was no failure swing here, with just the resistance block itself. If we go to the lower time frame here, we did have a failure swing model on GU, but the stop loss is way too wide. But we definitely did have another one here as well. We had this low right here, failure swing. We had a low, the low got purged, right? And eventually this right over here. So we had a failure swing. So right over here, low, that's into this low. How come? You see this low right over there. The 8 a.m., 8 a.m. This 8 a.m. purged out the low, this one didn't. So we had a failure swing. But when well, there is no bullish bearish candle. For the failure swing, there is no need of a there is no need of a sell side liquidity being there before the failure swing there. So you can see we had a low here, purge out the low. So we had a low purge beforehand. Now we have a low right over here. But this low has not created a bullish candle, which that doesn't matter for the failure swing. But for the CRT has to low, valid high, but a low roll, it does matter, but it's not a CRT here. So right over here, we did have we had a failure swing, super at the low. This one was a dominant low, so we had a sweet SMT with this one. This candle does not need to have a bullish candle in there, just need to have SMT. So we had a right SMT, and eventually we had the model one in the lower time. We're looking for a 1 minute interval to getting either disrespected or looking to do the right calculation. It says we have a wick all the way down here. You can enter the wick, or you could just enter based on the 1 minute interval getting disrespected. You can see we're at 1 minute what over here. 1 minute. Fucking what's the 1 minute good? What's a good 1 minute thing? This 1 minute order block, you get disrespect, long it up. But I highly say on this case, usually for the failure swing, you always want to use the threshold of the resistance block, or you want to use the wicks. In this case, if you're taking a trade, you could just use this wick. Entry right on the 50% of the threshold, because the market's all down here. You entry right on the 50% of the threshold, right over here, you're chilling. At 5 RR, market here to take profit. Nothing complicated. Because if you look at 1 minute time, look for 1 minute intervals, and when you're looking for that, market's moving already. You're missing out a lot of RR, right? So gotta be a little smart on that. Now that's that. And on this trade, now what's the lesson of this trade? We follow all our rules. The one big major lesson of this trade is we had the right entry, everything was cool. We put our stop loss right below the 50% of the threshold. Why? Because this wick is so big. Since the wick is so big, market is highly likely not to go back down to all the way to the threshold of this wick. So I was like, this wick is way too big. This total is way too big. Because if I'm entering here, put my stop loss here, this is a wide ass stop loss, right? So it didn't make sense to me, and there's a big ass volume here. Market did it explosive to the upside, so it doesn't make for the market sense to go all the way back down to the threshold. Our entry is right on the resistance block itself. It's the resistance block to the soup down model, and putting a stop loss right below the 50% of the threshold of the resistance block, right below this low, right on this low resistance block. As you guys know, market could potentially tap the threshold of the resistance block, right, of the total soup. To put our stop loss over here just to make it a little safer, which market did go lower and eventually went up higher. We're up only 3 RR. And what's the lesson of this? The stop loss is fine. Why is stop loss fine? Because the wick is so big, so you can put the stop loss like this is safe. So the lesson of this trade is one thing only, is we broke into early. And I'm gonna read you guys the fucking what are the rules? It says I'm reading you guys a rule. Profit variation, fixed 1 to 5 RR total soup entry, either failure swing or resistance block total soup model, or resistance block confirmed with an order block beforehand total soup entry, nothing else type of entry, and a fixed 1 to 5 RR. And I said break even is a scam. My stop loss is total soup, which it is right over here. My take profit is my stop loss is total soup. My entry is the OTE, And I said I never move my stop loss to break even. I let the whole prediction play out. I do not break even. I let the whole prediction play out. I literally repeated it, right? In this case, what did we do? We did not let the whole prediction play out. Yes, we did get stopped out. Cool. But this rule is very important. I said I'm not going to break even too early. I'm going to let the whole prediction play out. I said my entry is the OTE. Entry was the OTE. Tapped it once, tapped it twice, and went up higher. Entry was the OTE. My stop loss was the total soup. So if my stop loss is total soup, there's no need for me to enter. There's no need for me to move my stop loss. And what the next rule is, I accepted the risk on this trade. If I accepted the risk on this trade, there is no reason for me to break even. If it goes on a loss, guess what? Is accept the risk. I don't get into a trade that I don't accept the risk. If I accept the risk, I'm gonna get in. If I don't accept the risk, I'm not gonna get in. Right? Simple as that. So the lesson is, I do not break even too early. I only break even when my take profit gets met. If my take profit does not get hit, I do not break even. My entry is the OTE. My stop is total soup. I do not break even. I'll let the whole prediction play out, because market could definitely go back to my entry multiple times, because my entry is the OTE. I do not break even early. In this case, I break even somewhere around here on this bearish candle, but that's a bad sign. I cannot do that, and I will not do that again. It will not happen again. I will not make the same mistake here again. So the lesson is, I will not break even again. I will not break even or try my stop loss unless here's my take profit or my stop loss. Nothing else. I let the whole prediction play out, because my entry is the OT, my stop is total soup, my take profit is total soup as well. So I will not break even no more. So yeah, thanks for watching. Make sure you guys like, comment, subscribe, share. Join the description down below. This is a lesson of the week. It's a 46-minute long video. It's all lessonable here, and very lessonable week. Friday was the most lessonable week, and on Monday, when the market opens, if I see the market going here, my take profit, cool. But if I see market retracing a little down here, somewhere around here, I'm gonna try my stop loss to a fixed 1 RR, because as I said, equity balance rule on the power firms. If it goes all down to my break even, I'm breaking their rule, because I'm up 3 RR and I'm risking up for 5%. So since I'm risking up for 5%, they're gonna fuck me up. And they're gonna be like, okay, you lost way more. Because, okay, although I didn't have my stop loss here, but it's the equity edge balance rule. That's the problem, right? It's not the balance rule, it's the equity edge balance rule. The equity edge is basically the floating P&L without unrealized and realized, right? So it's the unrealized ones. So yeah. And one other thing is, after this trade, if it has to take profit, I will no longer risk 1.5% per trade. Why? Because if the market reaches back down from a 3 RR to my break even or my stop loss, I'm only using what? But even with the equity edge balance rule, I'm losing less than what I'm supposed to be losing. I can't lose 5%. In this case, if it goes back to my break even, I'm losing 5%, because I'm just going for 5%, right? So the reason I'm risking 1% here is because since I'm going for a fixed 5 RR every trade, I'll only need 2 trades to fast phase 1 of the challenge. I'll need 1 trade to fast phase 2. You can see right over here. So now, instead of just going for 5% each trade, 1.5, and even risking 1.5%, I will still need to take 2 trades. I'll rather risk less and still take 2 trades and make, get out the trade here. And if I lose, guess what? I lose less. So after the trade is take profit, I will risk 1% per trade on challenges and live accounts. Why? Because I have a fixed 5 RR, so I only need 1 trade to pass phase 2. I only need 2 trades to pass phase 2. Phase 1, 5 RR, 10% gain. 5 RR fast phase 2 as well. And yeah, that's the lesson. After this trade hit take profit, doesn't hit take profit, goes back down lower, we are going to still risk 1.5% unless until we get to break even and whatever happens here. So yeah, after the trade hit take profit, I'll risk 1% because I only need 2 trades to fast phase 2. Phase 1, which is 8% take profit. So phase 1 to 5 RR, phase 1 to 5 RR, phase 1 to 5 RR is 10% gain. That's for the phase 1. Phase 2, 5 RR is passing the phase 2. And yeah, I'd rather risk that much and lose less. If I'm risking 5% per trade and I go for a 5 RR, and guess what? I'm making 7.5 RR. But guess what? It's not enough for me to pass that phase 1. and I need to take 2 trades. So I'd rather risk, 1 RR. If I go in a loss, I'm losing less. If it goes on a win, I'm making, like if it goes on a win, I still need to take 2 trades. But guess what? Other one is the 1.5% risk still need to take 2 trades. Right? So they both still need to take 2 trades. And this one has less risk and it's way more consistent because I'm losing less, and it's way more better. It's way more efficient. It's way more better, right? It's way more consistent as well. I could lose less but make more, and I still need to take 2 trades per each. I still need to take 2 trades on both of the 1.5% risk and 1% risk, and they both still. Since I'm taking 2 trades, they both still make me pass that count. Right? I'd rather take the one that makes me lose less, but still make me pass with 2 trades and take the trade, and or rather take the option than taking 2 trades still to find the phase one, right? And raise 1.5% and lose more. I'd rather take the one that I need to risk. I lose less, I risk less, but I get still out with 2R other than the I risk 1.5%, I lose more, and I still need 2 trades to pass the account. So the phase 1. So yeah, that's a lesson. That's only gonna happen after the trade hit take profit. Otherwise, no, because I'm currently down, right? Because when I passed the 4.5 hour trade that we had, he pushed the rule, so I couldn't take it. But I'm still up 7.5 in a week, beautiful week. But yeah, thanks for watching. Make sure you guys like, comment, subscribe, share. Join the description down below, and I'll see you guys later. Peace out.